Singapore's state investor Temasek's net portfolio value jumped $49 billion to a record $518 billion for the financial year ending 31st March. That's mainly due to strong performance of listed Singapore-based companies and gains from key divestments. And for more, our reporter Ivy Chok joins us live now in studio. Ivy, good to have you with us. Now, $518 billion, that's like a 10.5% increase on year. Can you tell us some of the key highlights of this financial year and also some key numbers that you have for us?
Yes, so there are two numbers to look at. And number one is the net portfolio value, which you're right to highlight. It came in at a record high of 518 billion Singapore dollars. And that's actually an increase of $49 billion from the year before. If you look at it from a longer term perspective, it's actually nearly double the value from what it was 10 years ago in 2016. And Temasek is saying this is mostly due to, the strong performance of the listed Singapore companies based here in Singapore, and as well as key gains from some divestments. And the other number that we have to look at is also the shareholder returns. The one-year shareholder return at 10.5%. And as for long-term gains, the 10-year returns came in at 7.1% and 6.8% for 20 years.
So if we look at the wider context here, what about the Middle East conflict? How is all of that affecting performance?
That's right, Angela. Actually, the Middle East did have an impact. Temasek's direct exposure is actually quite small, so the first-order impact is quite minimal. And where the difference really comes in is the second-order impact, so which comes from, your higher energy prices, poorer market sentiment, and Temasek says it did cause the portfolio to decline by about 2 percentage points in the last financial months of the year. But when you look at the overall exposure to the markets, Singapore remains its single largest market at 27%, and followed by the US and China. But Temasek is saying that across these markets, there are still strong fundamentals. And AI demand is one of them. They're expected to drive growth even further. And Temasek has also identified some innovation scenes in US and China, especially, the bright spots in biotech and the robotics sectors. And Temasek is saying that, looking ahead, the investment landscape is set to be increasingly competitive. So let's have a listen.
What is unprecedented is the convergence of geopolitical tensions, technology transformation, energy security concerns, exacerbated by recent events in the Middle East. A demanding environment where fiscal space is constrained by rising costs and inflation and interest rates which are a drag on growth and returns. Meanwhile, generative AI is reshaping business models and the nature of work itself, bringing both opportunities and risks. Climate transition is under pressure amidst rising power demand. Taken together, this is one of the most challenging environments that we have had to navigate as an investor, seeking good, sustainable returns over the long term.
Now, Ivy, with all of these challenges, what other opportunities is Temasek focused on?
Yes, Angela, the biggest one that we are seeing here is actually artificial intelligence, AI. Right now, Temasek's artificial intelligence exposure is at 6%. They've actually set a target to increase this to up to 15% by 2031, and that's actually in 5 years' time. Some industry watchers are calling it a very ambitious target, but Temasek is saying that it's a multi-year structural trend. And Temasek is also saying that, with a lot of uncertainty in the geopolitical space, everything that's been changing in the world, they think that these themes like AI, energy infrastructure, and, clean energy transition, it will help them to stay ahead and really generate the long-term sustainable returns. So earlier today, I did speak to Temasek on what they want to do next. Let's have a listen as well. Anthropic and OpenAI, two of the biggest players in the field that Temasek invested in last year. But it's not a pure AI play. A snapshot of Temasek's holdings shows exposure across the value chain, from data centers and semiconductor firms like TSMC and NVIDIA to cloud services providers like Google and Tencent. Temasek says doing so can help hedge against risks like potential overvaluation of firms in the sector.
In the energy and data center space, actually, they're underpinned by long-term contracts with strong cash flows, with high-quality counterparties, and in some sense are very defensible. In the chips as well as the cloud services space, we're investing with people like NVIDIA, with TSMC, the hyperscalers, who, apart from the AI trend, also have got more broader businesses. And so I think by focusing on building a diversified portfolio, we can actually avoid the exuberance in certain subsectors along the way.
As the AI boom drives energy demand, Temasek is also looking at areas to fund the energy transition. This includes opportunities in renewables, decarbonization technologies, and upgrading aging infrastructure. The plan is to grow investments from 1% to 5% in 5 years. And it's not just about equity. Temasek is also scaling up its private credit segment.
The traditional sources of funding, including banks, for example, are somewhat constrained. So there's a gap, but there's an opportunity for private credit providers to step in and help companies grow. The second is that private credit offers a very complementary risk-return characteristic. It's typically more senior, certainly above equity, typically has a shorter duration, shorter tenors, which allows for capital to be recycled more quickly. And in most cases, when the payments are done in cash, you get a regular cash yield, which helps with the liquidity purpose.
As Temasek moves to beef up private credit to 5% of the portfolio, its main asset manager says safeguards are in place. Saviora Holdings points out having recourse and protection measures and strong collateral to guard against loan risks. Taken together, Temasek says these steps will not just help the firm navigate uncertainty, but also deliver strong returns in the long run.
Now, with this strong performance, Ivy, how does Temasek's results compare with other sovereign wealth funds around the world?
That's right, Angela. So the analysts that I spoke to, they mentioned that the performance has been better than it expected. I think they were talking about things like, taking into account the effect of the Iran war that we had earlier this year in February and March, that started late February and March. And so they were expecting the numbers to be lower, but today they're saying that it's better than they thought it would be. And if you can look at the chart over here from data platform Global SWF, this is a platform that tracks how these huge state investors perform. And if you look at it from the 20-year returns in USD terms, Temasek has actually climbed to the second best performing in the world, second only to New Zealand. And so the analysts are also saying that Temasek is positioned to navigate through these different challenges going ahead. Also, earlier I spoke to Diego Lopez, who's the managing director at Global SWF, to hear from him what he makes of Temasek's AI strategy. Let's have a listen.
I think it's very ambitious. So if you look at the current growth of the AUM up to 2031, the 15% would actually mean that 100 billion Sing dollars is invested into AI. So that's a big number, right? But if you look at the valuations of these companies today, I don't think it's unachievable. I think it's a natural progression on how the industry is going. And also it depends how you define the AI exposure. Most of these companies have until now been private, and most of the funding rounds have been fueled by sovereign investors. So the valuations are not necessarily according to market. They're more a private, judgment from these entities. But I think as these companies become public and more volume is traded, I think the price and the value and the valuation will become more real, and the risk will sort of mitigate eventually.
Ivy, thank you for the comprehensive report. I've been chatting with Ivy Chok, our reporter from CNA.